What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about silver and also a little bit of gold. But more importantly, I wanted to also go over some expectations that I have regarding the rate hikes over the next 5 weeks and how to prepare for it. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel, come and join us in the Precious Metals VIP Club for giveaways, deal alerts, live streams, and a whole lot more. I'm actually going live tonight, 7 p.m. Eastern Standard Time. And of course, last but not least, go and get your 2 free stocks by downloading Webull and funding your account. Everything is linked in the description. So today is Wednesday, February 9th, 2022. The current spot price of silver, as I'm filming the video, is $23.14. It's down 2 cents, or down 0.09%. Barely a red day for silver, but still red. Gold is currently $18.2820. It's up $2.60, or up 0.14%. Just a hair in the green. And of course, the gold to silver ratio is in the 78 to 79 to 1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. So today, I wanted to talk about quite a few different things. I wanted to talk about the silver. I wanted to talk about a little bit of gold. Now, sitting here on screen, we have a nice little selection. We got some 90% junk silver up there at the top. We have some miscellaneous coins on the sides. We got some Queen's Beasts. We got some Creatures of the North, and we have an entire tube of Canadian maple leaves. But before we can even get into the money, I think it's important that we first talk about the currency. More specifically, some expectations I have for the up-and-coming rate hikes. So for those of you that didn't know, the Federal Reserve had a massive meeting on January 25th and 26th. If you want to know what information was released and what Jerome Powell spoke about afterwards, go and watch the video where I covered that. I don't want to waste any time repeating what I said. I do, however, want to extend on what I said. And that's because I was thinking about it yesterday. Thinking about what exactly the next step is going to be after the tapering completes in mid-March. You see, currently the game plan is to taper until that point and then begin raising rates, likely around 0.25% at a time. But what no one seems to want to talk about is that the next 2 inflation reports could be massive catalysts in what could change the Federal Reserve's game plan. It could be a disruption. For example, the next inflation report should be coming out tomorrow, February 10th. I will be reporting on that as quickly as I can. I'm hoping to be able to do it on the day of the release, in which case that video will come out probably about 12 p.m., several hours before the market closes. Probably some pretty key information, so that video will be released early, as always, in the VIP Club. Link in the description to watch all my videos early. But if not, you can choose to wait until after the market's closed or the following day. But regardless, that should be coming out tomorrow, Thursday the 10th. And the next one is going to be based on all the data collected this month, which comes out next month, only a couple days before the tapering is expected to be complete. What if these next 2 inflation reports give us more bad news, worse news than what we've been getting every month for the last couple of months? What would happen at that point? What if inflation remains persistent, or God forbid, what if inflation gets even worse? I mean, inflation's at a 40-year high right now. I don't think I'm asking an unreasonable question. What if inflation gets worse before the tapering is complete? Would that mean that the Federal Reserve would resort to emergency action to raise rates at a more dramatic pace, maybe 0.5% at a time, maybe more? Would we have to take action before the middle of March? Would they have to end the tapering sooner? Only time will tell. And we're going to get a lot of crucial information tomorrow upon the release of the January 2022 inflation report, which, by the way, one thing that Jerome Powell said was that January inflation is probably going to be similar to December's inflation, maybe worse. And December's inflation was horrible. So it's something to remember, it's something to keep a close eye on. But my honest expectations are that we're going to raise rates probably about 0.25% at a time. I think we're going to do it in very small increments. If inflation remains persistent, I think that number's probably going to get bumped up 0.5% at a time, just for the sake of trying to get inflation under control. We did a whole lot of spending the last 2 years. We overstimulated the economy over the last 2 years. We still have billions and billions and billions of unused pandemic funds that we printed out and ended up not even using because we didn't need to use it. Now, who knows where those funds are going to be allocated towards next? Who knows where they're going to be repurposed? But regardless, that's my honest expectation. As for the markets, I think we are probably going to continue trending downward until the middle of March. I've been saying for the last week or so, my expectation is we're probably going to have close to 3 to 4 red days and 1 to 2 green days per week, every week for the next 5 to 6 weeks. That's my honest expectation. And by the way, in case anybody's curious how the market is behaving today, let's take a quick look. We got the S&P 500 up 1.07%. We have the Dow Jones up 0.8%. And we have the NASDAQ up 1.22%. We've been seeing a lot of red days. From time to time, we'll see a green day, kind of like today. But then again, I'm filming this video at 10 o'clock in the morning, so God only knows how the market is going to react throughout the course of the day. In fact, I wouldn't be a bit surprised if we nosedive halfway through the day today, because a lot of people are probably going to be rallying in before the inflation report comes out tomorrow, expecting bad news, and I wouldn't be a bit surprised if we see a very quick sell-off before the close so that tomorrow morning doesn't tank everybody. But who knows? Friendly reminder, if you go and download Webull and fund your account, they're going to give you 2 free stocks just for doing so. Webull link in the description. But when it comes to the red days and the green days, I could be wrong, but I do personally believe we're probably going to see far more red days than green days. I don't think it's going to be as dramatic and as painful as the month of January, where everything just kept crashing and crashing day after day after day. Everything went lower and lower and lower. I don't know if I necessarily see it being that bad over the next 5 weeks. It'll probably be trading more sideways than anything. I don't really foresee much of a crash happening over the next couple of weeks. But then again, as Chael Sonnen always says, I have the right to change my opinion if confronted with new information, so only time will tell. And by the way, really quick, before we get into the silver and the gold, I want to quickly mention that the digital currencies are also having a pretty good day today so far, similar to the stock market, which is really no surprise. They trade like tech stocks nowadays. Bitcoin, Dogecoin, Shib, Cardano, Ethereum, all in the green today. And if anybody wants $5 worth of any of those cryptos, go and download Webull, refer a friend. If they enable crypto trading, you'll get $5 worth of a crypto of your choice from that short list. Webull link in the description. Now moving away from all that, let's talk about the silver and the gold, and what I believe is probably a good way to prepare yourself or brace yourself for the next couple of weeks. First up, what we have on screen right here, nice little selection. We have some maple leafs. Actually, we've got a whole bunch of maple leafs down here. We got a type 1 and a type 2 silver eagle. Got a kangaroo over here. Some queen's beasts, creatures of the north, junk silver up at the top, and a whole bunch of maple leaves, of course. The beautiful, beautiful maple leaf. So those are some of my expectations for the next couple of weeks at the moment. And I think the best thing we could all be doing right now is not overthinking. If you spend too much time thinking, planning, and strategizing, that's where all your time, energy, and effort is going. I think that can really take away from taking action. So I think the best thing to do right now is to continue stacking and or continue investing as usual, but you might want to scale it back a little bit just for the sake of keeping a little bit of cash on the sidelines in case an opportunity presents itself to you, or in case of a sudden, drastic, unexpected dip. We all like to buy the dip, so it's never a bad idea to keep a little bit of cash on the sidelines. I personally would not be all in cash right now. That doesn't seem like the best move, especially with inflation on the rise. But at the end of the day, it's all personal preference. I'm not really a fan of cash. I'm not really a fan of the paper fiat currency. This stuff isn't really for me. The only currency that I like is enough to keep myself afloat and pay the bills and buy food and whatnot. Other than that, I would rather inject as much of my currency as possible into ways of spending to improve my life, convert it into silver or gold to hopefully store value, or invest it into something to hopefully create more. That's pretty much my game plan. That's my strategy. That's the way that I'm going to stick to things for the next couple of weeks, or should I say the next couple of decades, because to be honest with you, I don't really plan on changing much at all. I might focus a little bit more on one thing and less on another. It really depends on what's going on in the world. You see, depending on the financial news that we get, this is why I'm so obsessed with financial news. This is what I like to talk about. I like to figure out what's going on related to stimulus, what's going on related to inflation, what's going on overseas, how is it affecting the market, what is going on over here, what's going on over there, what's going on in businesses, what's going on in real estate, what's going on in precious metals, what's going on in the stock market, what's going on in the digital currencies. I like paying attention to these things and studying these things because I personally believe if you pay attention to everything and you familiarize yourself with the different markets and the different things that are going on that affect the markets, I personally believe it can help you stay multiple steps ahead of everyone else. And you might be able to catch a wave before everybody else tries to jump on. You might be one of the first to know. You might be someone that's preparing yourself before something happens that other people don't even know it's something to prepare for. Which is why I like to pay attention to everything. And it's why it's important to diversify. And why it's important to keep your eyes peeled at all times and keep your head on a swivel. Something going on in real estate right now could end up affecting the precious metals. Something going on with precious metals right now could eventually affect the stock market. They're different markets. They're completely different assets. They're for completely different reasons. But a lot of the time they move in the same directions. Maybe not simultaneously, but if one starts to move, the other ones typically follow. Which is why I think it's important to pay attention to absolutely everything. But in conclusion, I think the next 5 to 6 weeks are probably going to be more red than green. I don't think it's going to be drastic, dramatic red. I don't think we're going to see full-on crash at the moment. That's not what I'm expecting. That's not what I'm anticipating. Now, when the rate hikes begin, that's a different story. I think that's when the real fear, uncertainty, and doubt will be introduced to the markets. But right now, I think we should be focusing on what's going on at the moment. I think we should be focusing on what we have in front of us. I don't think we should be planning too far in advance. Of course, it's important to think about. It's important to brace yourself for different things that could happen. But right now, we got to focus on right now. That's the main important thing. And I think the best thing we can all do right now is to keep our eyes peeled, pay attention to as much as possible, familiarize yourself with the different reports that come out, become educated on the different markets, including the markets that you're not affiliated with. You don't have to be involved in real estate or digital currencies to read about them. and pay attention to what's going on. You don't have to be stacking silver and gold to be paying attention to how the precious metals are performing. You don't have to be investing in the stock market to pay attention to what the S&P 500 is doing today and how it's performing this week and what's beating the market, what's underperforming. It's never a bad idea to pay attention. And of course, in my opinion, I believe the best thing we could be doing right now is continue stacking and investing as usual, potentially scaling back a little bit just to keep some cash on the sidelines. It's never a bad idea to have some cash reserves ready to go in case an opportunity presents itself. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to your expectations, what's on your mind regarding the rate hikes? Do you think everything is going to go as planned? Do you think we're going to continue tapering until the middle of March and then begin raising rates in very small increments? Do you think the rug is going to get pulled out from under us and we're going to have to end the taper sooner and begin raising rates sooner? Do you think we're going to raise rates in larger increments than expected? And of course, what do you think the best game plan is for individuals right now who are stacking and investing? Head on down to the comments and let me know. If you guys like today's video, please hit that like button. Subscribe if you're new. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs in a bunch of different designs. DYDSS store will be linked in the description. Come and join us in the Precious Metals VIP Club, which is where I do giveaways every single month, deal alerts every single day, live streams multiple times a week. I will be going live tonight, 7 p.m. Eastern Standard Time. Come hang out. Of course, you can watch all of my videos early and commercial free, and there are a ton of other perks as well. VIP Club link in the description. And of course, last but not least, make sure you download Webull and fund your account. They're going to give you 2 free stocks just for doing so, and you currently only have 24 hours left. If you refer 3 friends, Webull's going to give you $150 worth of Amazon stock for free, with the chance of winning all the way up to $3,000 worth of Amazon stock for free. Just click that little invite button, send it to 3 people that you know. It's quite literally that simple. Don't pass up on an opportunity. You only have 1 day left. Webull link in the description. Time is running out. And I want you guys to head on down to the comments and let me know once again, when it comes to everything shared in today's video, when it comes to rate hike expectations, what are yours? You think it's going to go as planned? You think the Federal Reserve is going to stick to the game plan? Do you think that they will be able to stick to the game plan? Do you think tomorrow's inflation report and next month's inflation report are going to force them to scramble? And then, of course, when it comes to stacking, when it comes to investing, what's the game plan for you? Are you all in on cash right now, waiting for a dip, hoping for a dip, expecting a dip? Are you stacking and investing as usual, maybe scaling it back a little bit, kind of like what I'm doing, in preparation for a potential dip? Or are you going all in right now thinking that this is the bottom and it's only up from here? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.